produced by mass media news programming. No BS here, just the facts.
And now we present to you America's quintessential iconoclastic anomaly. Wow. In talk radio, your host, Joe Cristiano.
Welcome, everyone, to Liberty Talk Radio. I'm your host, Joe Cristiano. Today, we are pleased to have legendary commodities investor, Mr. Rick Rule. He's accepted our invitation to return to our show. Mr. Rule is chairman and founder of the Sprott U.S. Holdings and president of Sprott Asset Management. He returns to our show to discuss the fate of our natural resource sector and the economy. Please feel free to call in with your questions or comments, 646-652-4620, or toll free if it's more convenient for you, 855-866-1170. Rick, thank you so much for returning to our show. It's a pleasure and an honor to have you with us.
Thanks for having me back on, Joe. I appreciate it.
Well, Rick, I want to start off by just making a comment in that, you know, with all of the uncertainty in the world that we have today, and it seems to be compounding itself, with gold being a hedge against fiat currencies, why do I feel like I should break through this plexiglass window here on the 20th floor of the tower and not jump right off since I've been in commodities for so many years?
Well, first of all, you won't be around for a recovery, Joe. You would guarantee to be. I would hate to see on my own tombstone, he left at the bottom. You know, it hurt my feelings.
That's right.
Getting more to the substance of your question, if you were measuring your performance in any currency other than the U.S. dollar, oddly, you would feel fairly good about gold. We talked on your show the last time I was on about the fact that gold has been in a bull market for 14 months in every currency except the one that you and I spend.
That is correct, right.
Now, I don't know if past is prologue, Joe, but the last time we saw this situation, the extraordinary apathy surrounding the gold market, simultaneously with the beginnings of a gold market in every currency but the U.S. dollar, that occurred in the summer of 2000, which not coincidentally marked the bottom of gold for that cycle at $252. I'm not suggesting to you that past is prologue. I am merely suggesting to you that the strength of the U.S. dollar relative to other fiat currencies, and unfortunately for you and I, relative to gold, has masked what has been actually pretty good performance by gold in every currency other than the U.S. dollar. Right. I would note further that the extraordinary hegemony of the U.S. dollar has meant that it, rather than gold, has proven to be the safe harbor in Europe, given concerns about Greece.
Right. Well, you know, it's interesting because as there is a saying, we are Greece. We say we, the United States is Greece in many respects. And it's interesting that Puerto Rico is encountering and experiencing the same type of economic malaise as Greece, and of course Puerto Rico is the United States, and yet we don't see that connection where the dollar still maintains its crown of being king of all currencies, and you would think people would say, you know, there's a problem here. The dollar probably is not the safest place in the world to be. Gold is your true safe haven, and there would be some sort of wave or pressure in that direction. But it seems like today, I think gold is going for like $1,146 an ounce, and that's kind of a low spot. And you would think with all of this contagion around the world that gold would be, even in U.S. dollars, would be lifted. And I don't see that, and it just confounds me. I almost feel like I'm back in the 1980s.
You've said a lot of things in that statement, Joe, and so I'll try and deconstruct it back.
Sorry about that.
No worries. I do think that the dollar is the global hegemon, if you will. And as we discussed last time I was on your show, I don't believe that gold will replace the U.S. dollar in my lifetime. I don't even think that gold will win the war against the U.S. dollar. I just believe that gold will lose the war less badly. The last time I looked, and these aren't my numbers, they came from, I think, Morgan Stanley, gold and gold-related securities occupied 1/3 of 1% of the average savings and investing matrix of an American citizen. comparing that with 1980, when gold occupied 7 or 8% of the same savings matrix of the same population.
That's interesting.
If we were to take gold to 1/2 of 1%, or perhaps 1%, which I personally believe likely, given that the U.S. accounts for 24% of the private savings in the world, I suspect that that move from 1/3 of 1% to 1%, were it to occur, could easily take the gold price to $2,000 or $2,200 an ounce without any form of crisis whatsoever.
Right.
I don't think that there's any requirement that we have the sort of catastrophe that seems to fascinate gold bugs. And I don't think that gold needs to win the war against the U.S. dollar. It just needs to lose the war less badly. And by the way, Joe, I think that's inevitable, if not imminent.
Well, Jim Rickards in his books, he talks about the dollar eventually losing its class as the world's reserve currency. And we see that happening with the AIIB, the Asian Infrastructure Investment Bank, and with the countries trading in the proprietary currencies other than using the petrodollar, the BRICS, et cetera, and I can go on and on. He foresees that down the road and in the near future, we might have a new reserve currency, something on the order of SDRs, special drawing rights by the IMF or the World Bank or whomever that may be, I guess the IMF, and the special drawing rights will be backed by a basket of currencies, including gold. You have any comment on that or any opinion?
With the caveat, Joe, that I'm an investor and a credit analyst, not an economist.
Okay.
I would respectfully suggest that what Mr. Rickards is talking about may be something that occurs 50 years from now. But the depth and liquidity of the U.S. sovereign debt market is such that, and the depth, liquidity, and transparency of the U.S. dollar market is so large that for the foreseeable future, my suspicion is that the dollar will reign king in the market. There is certainly an intelligent response by foreign governments to want to limit the amount of seigniorage that the United States enjoys as a consequence of the dollar. But, Sprott has very large Asian clients, including parastatal clients. And I remember speaking to some of the employees of these clients privately, talking to them about the U.S. 10-year Treasury, which they own lots of, and asking them respectfully why.
Yeah.
I sort of described that instrument in effect as a lie. And one of my counterparts looked at me and smiled and says, yes, Mr. Rule, but a very liquid lie, unlike all of the other lies that we have the ability to buy. And I found that to be a very illuminating comment. With regards to the special drawing right, that ends up being a synthetic currency, even stranger than the U.S. dollar. My friend Doug Casey once said that the dollar was effectively an IOU nothing.
Right.
And he said that made it better than the euro, which was a who owes you nothing. And the circumstance about a construction of special drawing rights that included synthetic currencies like the euro means that medium of exchange is in fact an over-the-counter derivative rather than a currency. At least the dollar is a currency.
Yeah. Well, I guess I come from, I was born a long time ago. I know I look young and beautiful and all that, but I'm quite old. I remember, taking care of my grandfather and whatever, and all of those people, everyone in my family, they instilled upon me. My father, he was a businessman. He came here, hardly spoke English, had 200 people working at a factory for him, and he had a wonderful company. Died broke, unfortunately, and very ill. But one thing he instilled on me, he used to say things like, own nothing. Don't spend, save your money, invest. I mean, old-fashioned,
Yep.
saying. And I'm sure you're familiar with all of them. If my father spit them all out right now, you'd be familiar with every one of them, and you would agree with them. And today, we don't live in that society. We live in a society where spend today, worry about paying it tomorrow. We know you can't, but don't worry about it. Just go out and have a hell of a lot of fun. And if you look at our currency's that way. I had on my program a couple of years ago Professor Kutlikoff from the University of Boston, and he was talking, and this was about 2 years ago or so, that in his calculations, the unfunded U.S. debt was, at that time, $223 trillion. I mean, according to his calculations. And I can't tell you how, obviously, he arrived at it. And even the current year's obligations, much higher than what we pronounce at this point in time. But and you look at these numbers, and they can never be paid back. The U.S. dollar is in fact true debt and is in debt, and yet we talk about the U.S. dollar being, sort of supreme, reigning supreme, as you've said, and it seems to be the smallest, as I say, the tallest midget on the basketball court. And with that, you would think that there would be some sort of gravitation towards something of intrinsic value, but it doesn't seem to happen, and it confounds me. I can't seem to understand that.
Well, again, Joe, you said many, many, many things. The first is the arithmetic, and the arithmetic is very bad. According to the Congressional Budget Office, and I'm not going to debate the efficacy of that organization, the on-balance sheet liabilities of the United States government are about $18.2 trillion.
Correct.
That's a number with 12 zeros.
Right.
State and local governments, of course, add to that total, which they conveniently ignore. And the off-balance sheet liabilities, according to the Congressional Budget Office, are about $100 trillion. Now, for your viewers, off-balance sheet liabilities are sort of a nebulous thing. All the viewer needs to do is look at you and look at me. I'm 62. I'm pretty soon going to be 65. I'm what an off-balance sheet liability looks like.
Right.
So that is problematic. The other side of the ledger, however, is the memory that you and other people have of your grandfather. This is still the most productive, the most innovative economy in the world. And unfortunately, the security for that debt that we talked about is all the physical property in the United States and the earnings capability of all the chattel of the U.S. government. We used to call ourselves citizens, but in fact, the chattel. I live in a strange place called the People's Republic of California, and it was called to my attention very recently that 1% of California taxpayers, including myself, pay about 50% of the income tax in California, and 1/4% pay about 40% of the tax in California. What that means is that the whole state of California runs on the innovation of Silicon Valley, basically.
Yeah.
And the problem that you describe is increasingly that the United States involves a transfer system from the productive citizens to the unproductive citizens. Fortunately for all of us, there is an astonishing number of highly productive people in California. With regards to values, Joe, I have to say, I'm feeling better and better. I was very recently at Freedom Fest in Las Vegas, and had the extraordinary good fortune to meet all the young millennials who work for Liberty.me and Students for Liberty. And I have to say that they are numerous, and they are smart, and they are hardworking. And with regards to the people part of the equation, while I don't feel good about who we elect, I'm feeling better and better and better about who we are. It is very difficult to spend 3 or 4 days with the young people at Students for Liberty. By the way, there's 140,000 of them worldwide, and not come away feeling better than you felt when you went in.
Right. Right. Yeah, we've had the Students of Liberty on our program, and I'm a financial support of that. of that organization, and we also have had Young Americans for Liberty,
Correct.
In fact, we were down in Austin with Ron Paul and Greenwall and Malco down there, and my wife and I drove down there to be with them. And I was very encouraged, and there does seem to be a groundswell where people are truly waking up to the fact that we all need to be more productive. My concern is that we are overwhelmed, just numerically overwhelmed by those people who believe that we need more government, and it's going to be a very, very tough battle to fight. I still can't fix in my own mind how something, a currency can be so corrupt, if you will, and still maintain its status as the world's reserve currency. If I was overseas, I would be screaming, knowing the numbers. The only thing is that the people who are screaming are in worse debt than we are in. But how long can this just go on forever when we're talking trillions of dollars in debt, and we may soon in the next few years be quadrillion dollars in debt and still be the world's reserve currency, regardless of how productive we are?
Well, I guess, Joe, that's the $200 trillion question, isn't it? With regards to the circumstances that you just described, by the way, I agree with every one of them. I was providing a counterpoint to tell people not to stick their head in the sand or shoot themselves in the temple.
Yeah.
My own antidote to that is, ironically, I have a reasonable bit of cash, because my suspicion is that if the faith in the economic system begins to falter as it did in 2008, despite the fact that you don't get paid much interest in cash, it will come in handy.
Right.
It will give you the tool and the courage to take advantage of the distress in the markets. And I am also, as I have been for some time, using the downturn in precious metals prices to increase my holdings of precious metals.
Right.
I'm doing that for two reasons. I'm young enough that at least I think I'm young enough, that I want to increase my net worth, my wealth. And the adage that you buy low and sell high presupposes that you had the courage to buy low,
Right.
which I'm trying to do. I also do it because the essence of wealth, I think, is enhancing your sense of well-being. And I feel better owning gold and having cash. I've had points in time in my life with very little cash and points of time in my life with lots of cash. And for some reason, Joe, I felt better in the times when I had lots of cash and lots of gold. So I'm trying to do just that. And I can't tell you if I'm going to be right in 6 months or 24 months. All I can do is look at the arithmetic. This isn't like quantum physics. Look at the arithmetic and do what feels prudent to me. And what feels prudent to me is owning gold rather than U.S. 10-year treasuries for the reasons that we talked about the last time we were on your show. Namely, that the U.S. Treasury is, if nothing else, a bad deal.
Right. Yeah. It's interesting because purchasing anything when the price is going down is very, very difficult to do. I'm an accumulator. I'm very, very old-fashioned. If I have cash, I like to have cash, but it better be in my possession, not the bank's possession. I have companies, and we have to have certain working capital and whatever, and that scares me because there's a heck of a lot of money in these companies, and it's sitting there, and we turn it around. But if there's ever a breakdown somewhere, we can stand to lose a heck of a lot of money. So I try to keep a good balance and understand that I need to have some in the event something occurs, and it's going to be something that we don't expect. At the same time, buying precious metals this time is a very, very difficult mental exercise because it's not an attractive thing to do. You almost have to force yourself to buy it and then put it away and forget that you did it. But it reminds me of, when a refrigerator is on sale, if a refrigerator costs $2,500 and it's on sale for $1,500, people will flock to the store to buy it. But when the refrigerator company when their stock goes from $25 and goes down to $15, and assuming the company is still solvent, everyone runs away from it. And it's the exact opposite of what we normally do. But it is very, very difficult to buy, as J.P. Morgan would say, when there is blood in the street.
That's correct. It's particularly difficult when you have already owned the item, which has declined in price.
Right.
People's expectation of the future is set by their experience in the immediate past. It's difficult if you own gold at $1,300 to buy more at $1,150. Now, Warren Buffett famously says that you shouldn't make a purchase of any financial asset unless you would be delighted to see it fall 30% in price in the 2 months after you bought it, so that you could use the knowledge that you had and buy more. Sadly, Joe, I've tested that thesis dozens of times. And I have to say, personally, while experiencing the circumstance was never pleasant, over time, that discipline has worked out very, very well for me.
Yeah.
And the anomaly that you point out is one that your viewers would do well to consider. The difference between financial assets and physical assets or consumer goods would seem to be that people would rather overpay for financial assets when they had exhibited the type of performance that people would want to see. They're so-called Geffen goods. In other words, when the good has been marked up by 20% rather than down by 20%, because the direction that people want to see the pricing of financial assets take, that in and of itself is regarded as a good. It's a very strange point of view, one mercifully I have never come to share. But it is one that your viewers need to ponder in terms of their own investment performance.
Yeah. One thing that keeps me going, I recall several years ago, I was really disappointed in myself because I bought a roll of Silver Eagles, and I paid the unconscionable price of $7.50 a coin. And I remember driving all the way home, my wife saying, how stupid could I be? I mean, am I nuts? What, am I throwing money? And I remind myself of that time, so that keeps me going. And by the way, Rick, we do have someone on line one. Would you like to take a question at this time?
Delighted,
okay.
Joe.
Line one, please.
Hello, good morning, Joe. Good morning, Rick. This is
Good morning.
Jim from Bixby, Oklahoma.
Oh, Jim, thank you for calling.
You're welcome. Rick, it's an honor to talk to you and have you on this broadcast. I followed you for about the last decade, both your commentary, both on both written and when you do audios like King World News and other broadcasts, and always felt that you're just very insightful, the knowledge that you have to share. But I wanted to ask you, as an investor, there seems to be a disconnect between the paper precious metals market and the physical market. And I was wanting to know if you could explain the nuances of that differences and how it affects the price of either or both. And then also within the precious metals ETF options that are out there, how does the Sprott offerings differ from the other precious metal ETFs?
Thanks for the question, Jim, and I will do my best. The situation that you described, where there's an extraordinary difference between the paper and certificated precious metals market and the physical precious metals market, is, I think, a function of our time. I don't think there's anything necessarily wrong with the system, but I think that the extraordinary leverage that's present in the futures market and the derivatives market has the potential to harm a lot of people. Many people in the precious metals community blame the non-physical market, the futures, the so-called paper market, for being responsible for the gold price decline and the silver price decline. I would point out to people that the paper market was also responsible for a bunch of the increase. The move in gold that we enjoyed from really 2001 to 2010 was led largely in the paper rather than physical market. I'm not trying to say that there wasn't underlying physical demand, but as an example, the creation of the ETF, the GLD, greatly facilitated the non-physical ownership of gold and later silver. and was responsible for part of the price rise. The truth is that we have a market that is both physical and paper. And for many people, myself included, certificated ownership of gold, silver, and platinum and palladium is more convenient than physical ownership. I understand, and I do own some physically as well. It's nice to, if you will, pet your gold. But the truth is, if I own gold in certificated form, I don't have to pay the dealer markup and markdown. When I buy physical gold, the dealer seems to get 3.5% coming and 3.5% going, meaning I lost 7% in the middle. I don't have to run the risk of physically transporting it from where I bought it to where I want to store it. I don't have to pay to insure it, and I can buy it and sell it with the click of a mouse. The other thing for me that gives certificated ownership of gold, at least some certificated ownership of gold, more allure, is the fact that if the certificated ownership comes in the form of a trust, like the Sprott instruments, if I'm lucky enough to buy low and sell high, I'm taxed on the gain at the capital gains rate. Whereas if I own the gold ETF, GLD, or if I own physical gold, I'm taxed as a collectible at the ordinary income rate. And I'm enough of a patriot and enough of a pragmatist that I would rather pay the enemy less. The idea that I pay the capital gains rate rather than the ordinary income rate seems to be the right thing to do practically, and also the right thing for me to do socially. Don't feed the beast. Now, we believe,
Rick,
as of course
Rick,
we would.
I misunderstood or didn't hear you clearly as to what type of precious metal sale it only would be subject to capital gains versus the collectible tax.
Certificated precious metals that come in the form of a trust, not an ETF, like the Sprott Physical Gold Trust, the Sprott Physical Silver Trust, and the Sprott Physical Platinum and Palladium Trust. Because they aren't regarded as surrogates for gold, but rather shares in a trust that owns gold, are taxable at the capital gains rate. There are two principal trust instruments available for U.S. investors. One are the Central Gold Trust and the Silver Bullion Trust, offered up by the Spicer family in Toronto. And the other is the Sprott Physical Gold, Physical Silver, and Physical Platinum and Palladium Trust. We believe that our trust instruments are superior because ours are redeemable for physical precious metals, while theirs are not. The consequence of that is that ours have always tracked the market actively and often exhibit 10 times the trading volume, so hence less trading spreads. The logical outcome of that is that the central products have often traded at a 15% discount to the metals price, while ours have traded very close to par. And the consequence of that is that we are now tendering for their product. We are trying to replace them with ourselves at the suggestion of their largest shareholders. So one of the things that you'll read about Sprott is that we have initiated, let's be polite and say, an uninvited tender for the assets of the Central Gold Trust and the Central Silver Trust in the U.S. markets. We think a normal market function, replacing an inferior product with a superior product.
Well, Rick, that's very helpful explanation. Can you share with me? I know I could look at it online, but the tickers for those for your trusts, and then I'll take your comment offline about the anomaly of palladium being priced currently less than the spot price of gold. But if you could give me those ETFs, and then like your comments on how palladium dropped.
PHYS is our physical gold trust. PSLV is our physical silver trust, and SPPP is our physical platinum and palladium trust. All three trade on the New York Stock Exchange. The anomaly with regards to palladium, I think, is easy to explain because of the decrease in oil prices. The Russians have been forced to sell much of their stockpiles of physical commodities, much as they were forced to do in 1992, to maintain the activity of the Russian state in the face of lower oil and gas prices. This is just a straight-out sale. Very easy to explain. The softness in platinum prices is a little more difficult to explain. I think you have to explain the softness in both platinum and silver prices to very weak demand across economies around the world. Lower electronics fabrication, lower vehicle fabrication, which has in turn led to lower demand for commodities involved in production, like coal, like copper, like oil and gas, like platinum, and like palladium.
Oh, Jim, are you still there? No. Jim is off the line. Okay, well, thanks, Jim. Okay, Rick, if you could hold on just for about a minute and a half, we need to take a break to give our sponsors an opportunity, and we'll be right back with you.
Thank you, Joe.
You're listening to Liberty Talk Radio. Political talk derived from a historical perspective, not always palatable, but good food for thought. Pure libertarian talk with host Joe Cristiano. LibertyTalkRadio.com.
Express Test is your go-to company for on-site occupational health testing services. That's right, we said on-site. That means we will meet you at your facility for a free health and occupational safety consultation. Express Test specializes in hearing conservation, respiratory protection, and employee safety. We can help you establish viable programs tailored to your business and employee needs. For your free consultation, call 918-743-2929 or visit us at expresstest.com. That's 918-743-2929 or expresstest.com. Do you find yourself asking, what did you say? Aaron Cristiano of Ranch Acres Audiology has over 25 years of experience helping patients just like you.
Hearing requires conservation. We need to be aware and we need to be responsible for our own hearing health.
Understand more with a little help from Ranch Acres Audiology. Call 918-749-7711. That's 918-749-7711 to learn more. We'd like to thank attorney Constance Squires for her support of Liberty Talk Radio. If you want a comprehensive way to affordably avoid legal issues, call Constance Squires. For a free consultation, call 918-254-9283 or go online at isthyWillDone.com.
Steve Harden of the Harden Insurance Agency has over 30 years of experience designing family insurance protection, including retirement planning. Call 918-488-0024 or go to hardenagency.com and request a free in-depth estate and retirement evaluation. We look forward to earning your trust and helping you meet your life goals.
This isn't your typical talk radio show. This is Liberty. Liberty Talk Radio.
Welcome back, everyone. This is Joe Cristiano. You're listening to Liberty Talk Radio, and with us, we are pleased and honored to have legendary commodities investor Rick Rule with us. And we do have, Rick, we have another caller on the line. You want to connect him now? Okay. Here we go. Caller, you're on the air.
Yeah, hello, Rick. Good morning.
Good morning.
I'm catching you on the highway, so you caught me just as I was ordering a McDonald's. I apologize, but let me do this real quick. Hey, yeah, just one scrambled egg. That's all I need. Thanks. Sorry about that.
Hey, can
Rick,
you give me a
you're
McMuffin?
talking about these certificates of gold, right? That you can buy that are valued at gold and they're cashed by the value of them. You can demand real gold for them. Hello?
Oh.
I'm having a bad connection.
Wait, hold on. Caller, hold on.
Yeah.
All right. Rick?
Joe, can you hear me?
Yes, yeah, now we can hear you. Okay. Fault was on our end. We apologize.
Okay. I didn't really understand the question. I'm sorry.
Okay, the certificates that you can invest in of gold that are, paper, but they're backed by real gold.
Yes.
They seem to be interesting to me. I mean, I'm not a big gold investor at this point. I'm still gathering enough silver and stuff to make it, that I have I can do in smaller increments, but I know that eventually I'd like to, cash in some of that silver for gold. And but as far as a strategy, and if we do have a financial collapse, how does someone get that actual value in back to where they can use it if there is a catastrophic event?
The investor would tender their physical certificates either through their broker or directly through the transfer agent, or failing that, directly through Sprott Inc. in Toronto, Canada. The physical inventory of precious metals is held in the Royal Canadian Mint in Ottawa, Ontario, and you surrender the certificate, and in exchange we will give you the certificate's value in underlying precious metals. It's a feature that isn't actually exercised by small investors very often, because frankly it's much simpler, should you want to switch between silver and gold as an example, to physically sell your certificate on the New York Stock Exchange and physically buy a gold certificate. It's much more convenient, if you will, to execute buy and sell orders on the New York Stock Exchange rather than redeeming your certificate. The beauty of the redemption is that it's available if you should need it. The other beauty is that because of the redemption, if our trusts ever sell at a substantial discount to the value of the underlying metal, institutional investors will sell the metal, buy our instrument, tender them for redemption, and then sell or deliver the metal that they received from us to cover the short, which means that our instruments never trade at any substantial discount to the underlying value of the metal, unlike competing instruments which can sell at 15% discounts.
Right. Yeah. That, I wonder how much that has to do with the devaluation of the entire market. You know, and that people know that, so they're getting that discounted.
Well, sadly for Sprott, the the aggregate value of our precious metals products is probably $3.5 billion. So the metals market, I don't think they
That's
even
a blip
notice
on the radar screen. Yeah.
I don't think they even notice our existence, sadly. Now, hopefully, we'll be able to correct that over time.
Right. Okay. Well, thank you. You kind of answers my question. And
Thank you.
the other, I guess, I had another question. It would be, how would you use that instrument now to, to garner wealth? Can you do it? And I missed the first part of the show. I just tuned in late on the last segment. How would you use those as far as a retirement? Is there do they qualify for all the different tax deferred programs and things like that?
They qualify for IRAs and KEOs and all of those types of things. And so you can use them, in effect, as a substitute for physical precious metals. In one respect, they're superior to physical precious metals. For U.S. taxpayers, the gain associated with the trust instrument is taxed as a capital gain, whereas the gain on physical precious metals or metals held in an ETF is treated as collectible or ordinary income. So one of the benefits of the physical trust products is that they're taxable to U.S. taxpayers at a capital gains tax basis rather than an income tax basis. So in that sense, they're superior. Okay. Actually, they're superior to the physical product.
I see. Okay, well, I appreciate that. Thank you for your answer, and we'll keep listening.
Okay, thank you, caller. Thank you very much for listening to Liberty Talk Radio. Janet Yellen now is talking about a possible interest rate increase. I do not think it's going to happen, personally. But everything is data dependent these days, and then you have to ask the question: which data are you looking at? The data that she looks at, and the way she looks at it, and the data I look at, and the way I look at it may be two totally different economic anomalies. So do you think there's going to be a rate increase? If there is, what kind of effect would that have on the commodities market?
I do think there'll be a rate increase. I think if Ms. Yellen doesn't do it, that the market will do it for her. Okay. The interest rates have clearly been manipulated down. There is a massive wealth transfer taking place in the United States between spenders and savers. The low interest rates constitute a war on savers.
Correct.
And at some point in time, if the market begins to lose a little faith in the economy, not a lot of faith in the economy, a little faith in the economy, the so-called bond vigilantes that troubled Bill Clinton so much will come back into the market. And I think that Mrs. Yellen is right in her sense that she needs to raise interest rates. Whether or not she has the political leeway to do it is a very different circumstance. People have told me from my whole career that commodity prices and interest rates can't rise in tandem. In response, I tell people that I entered my business career in 1970. And for the next 12 years, interest rates and commodities did what they can't do. They rose in tandem.
Right.
Interest rates are left to the free market, the saver's defense against inflation. The interest rate is simply a risk premium and an inflation premium. And to the extent that there is actual inflation or fear of inflation, the interest rate is the natural way by which savers are compensated by spenders for the transfer of capital. Ms. Yellen and her predecessors have been extraordinarily successful in manipulating the interest rate down, inadvertently perhaps punishing savers at the same time subsidizing spenders. Now, the political class is, of course, the most profligate spender in society, and the arguments that libertarians make often is that the center can't afford higher interest rates simply because the debt service would overwhelm them. And certainly one trained in Austrian economics believes that eventually gravity, if you will take hold and depress the faith and confidence that has allowed this manipulation of the interest rate to succeed. The other comment I would make with regards to Ms. Yellen is I actually sort of think deep down she's a well-meaning human being. My problem with her is that she's never had a job, Joe.
Good point.
And I think that a person like her, a person who has existed in the artificial air of academia and government, is very much in touch with the esoteric elements of economics and central banking, but is completely out of touch with things like meeting a payroll, delivering a product and a service. And one of the extraordinary nervousnesses that I personally have is the faith that ordinary Americans put in the big thinkers of the world, the Boehners and the Yellens and the Obamas. I need to point out to your listeners the obvious, which is none of those people, on the right or on the left, Democrat or Republican, I shouldn't say none, but very few of them have ever had jobs.
Right.
And if they had jobs, they were lawyers. Nothing against lawyers, but I would rather have the people who lead my economy, I would like them to have gone without a paycheck for a couple of months so that their employees could have paychecks.
Right.
I would like them to have had to deliver a good or service at a profit and been punished mightily, as I was when they failed to do that. That would make me feel better about the leadership exhibited by the big thinkers.
You're describing my past, by the way. My wife and I one time went 2 years, and I can talk about an hour about how we survived those 2 years together. And I was actually hanging laundry out in the backyard in the wintertime because we wouldn't turn the heat on. I mean, we do things like that, and I had a business go under 3 times for various reasons, and now that business is the biggest of its type in the state of Oklahoma. But you don't, what's strange is that you don't realize how much you're suffering while you're doing it. Isn't that strange? You look back and you say, I couldn't have done that. That's inhumane. I mean, that's and yet you realize you've been through that, and that does carry over. It does color the way you do things and the way you think. And when I listen to a Miss Yellen, I don't know where she's coming from. I don't know how she can say what she said. I would never say what she says because we're not philosophically in the same room. So to me, it's just a lot of fancy words. Quite frankly, I don't follow her at all. Her sentences have no periods; they just go on forever, and they sound very, very nice. And then if someone said, "Tell me one thing she said," I would say, "I don't know. Let's go for coffee," and that's the end of the conversation. I have a real problem right now with our government and the way our government speaks with us. You brought up savings. I'm of the old school. I'm believe it or not, quite a bit older than you are. You wouldn't believe that, but I am. And not quite a bit, but I am older than you are, and I go back a decade earlier than you. And yet, my way of thinking and the way I was brought up is that savings were critical not only for your own self-protection, but for protection of your family, but also for the economy, giving the economy money with which to invest money that's been saved into productive resources. All of that seems to have broken down, not only from an investment point of view, but from a cultural and family point of view, all of which is the glue that holds an economy together and makes it grow and strong rather than continually digging itself deeper and deeper into that depth of debt, if you will. And I'm frightened. I'm frightened. I'm concerned. I find it very difficult to see forward and say, well, we're going to work out of this thing. I just don't see it, and yet I'm not, the expert. I just, from my background, it gives me reason to pause.
Well, Joe, I think the answer to that is that you are right and they are wrong. That's very simple.
Thank you. I feel so much better now. I will not jump out the window.
That's not a Janet Yellen sentence. That's a simple declarative statement. I want to share something that will amuse you. On the Sprott Inc. Balance sheet. Sprott Inc. is a public company, my employer. And we try to walk the walk, which means that our balance sheet has about $350 million in working capital and no debt. We employ $60 or $70 million in the business, which means that we have substantial free working capital on the balance sheet, what you and I would call surplus. The accountants, interestingly, call that a redundant asset. Now, I have never in my life felt that my cash was redundant, which makes me wonder something about accounting. And very recently, a young analyst, who I think is actually a fairly smart analyst, described us in public markets as having a lazy balance sheet. This young gentleman works for a bank, which is, of course, leveraged to the hilt.
Right.
And I suspect, and I told him this on the telephone, that he would find in the course of his career that the balance sheet that he described as lazy is not. It's prudent, which is a very, very different word. So in response to this growing belief that people and organizations should be capital light, I think you are right and they are wrong. I think it's that simple. And I think that the degree to which you are right will play out this decade. I suspect that you will be vindicated. And if you are wrong, the truth is you just had too much cash, which is okay.
That's right, yeah. I read with interest from time to time when they announce a bankruptcy in some of the financial newspapers, and you'll see a person's name and the name of the company, and they'll have assets like $343,000. You say, well, geez, that's quite a significant amount. That liability is $4.8 million. And I often think to myself, how do people ever get to that position? And then I reflect, do you know, this is really reflective of the balance sheet of many Americans today, where they may have a new car and a new home and their children are going to private school. And if you look at their bank balances, it's about zero. And if you look at the liabilities, it is a hellacious number, but we all appear to be living rich. And I'm the opposite. I told my wife the other day, I said, I think you're the only woman in the state that probably has zero in accounts payable. I mean, has no liabilities. Everything gets paid when it comes in, and it's paid in advance or whatever. And we don't have any liabilities. And I said, you're going to be the only woman in the entire state that way from what I read. And I don't know how people live that way. And how are they going to transcend a time when, or survive a time when there is some sort of financial anomaly that restricts their inflow of cash for them to pay off all of their debts? Cars being, 7-year loans on cars now, no payments for 12 months. Don't worry. In fact, I saw an ad just the other day. It said, want to buy a new car? No problem. Have no money? No problem. No payments till next year. This is the mentality that I don't understand and people buy into. And I don't see a very, very positive outcome from all of this.
Well, I agree with most aspects of what you said. I have the good fortune to have a wife that's sort of the same as yours. You feel sorry for the merchant when she goes into a store. She's very tough. I remember being brought up with a little poem that I'd like to share with your listeners. When your outgo exceeds your income, your upkeep becomes your downfall.
That's interesting. I've never heard that before. It's
very simple, and it's something that Congress should pay attention to. I'm not a real estate investor, but I remember in 2005 or 2006 driving north on the 405 freeway in Los Angeles. And I am a lender. I saw a billboard on the right side of the road that said, borrow 125% of the value of your house. Bad credit, okay. I remember thinking, this is not going to have a happy ending. I don't know how it's going to end. Of course, we all found out how it's going to end.
Yeah.
And I would suspect that the subprime auto loan is going to have something like the same form of ending. It's worth noting, of course, that in the last 18 months, the American consumer has done something that nobody expected that the American consumer would do, which is reduce the aggregate net debt of private consumers in the country. And it's also worth noting that the treasurers of the S&P 500, the largest industrial companies in the United States, have done a superb job of fattening their balance sheet since 2008. The events of 2008 scared the hell out of the private sector, and they responded the way you would in your own family. Individually, I think Americans are probably not as dumb as we appear to be. The problem is that when we get together as a collective, we're absolute idiots.
Well, isn't this an attempt by people who maybe intuitively recognize the fact that the course of action that we're taking and what we're being promoted via television, whatever, and advertising to do is really not. It does have its end game, and people reducing their debt, is that not an indication that people are in fact feeling the squeeze? Because if they felt rich, they would continue to promulgate, all of this spending. I'll buy even a second sports car, one for my daughter or something, because I have all this income that I know in my own mind that will come to me someday because things are going so well. When people are reluctant to spend and they start saving, isn't that an indication that they don't feel very good about their future, and that a black swan event may in fact be the end game for them?
I think you're right, Joe. Real workers' incomes in this country, absent workers in professions where there's real scarcities, have been stagnant for 20 years.
Right.
And pricing has not been stagnant for 20 years. And I think that real workers in the United States are capable of doing arithmetic. It's more pleasant to believe that the big thinkers are going to solve your problem for you, that you don't need to be responsible for your own financial future. But I think the ether surrounding that sort of response is beginning to thin, and people are beginning to understand that they have responsibility for their own financial futures. And if they can't increase their top line, they have to do something to increase their bottom line.
Right.
They have to build up a buffer between what they earn and how they live. And I'm encouraged by the fact that, however slowly, the consumer in the United States is starting to take responsibility for his or her future, very much like corporate America has done for the last 6 or 7 years. Of course, it's more fun to offload responsibility on somebody else.
Right.
But it's more prudent to do it yourself.
Right. I know of many people who recently have been talking about getting their finances in order. You know, everyone has friends that, you know, maybe don't handle their money very well. But so many of them are just about every one of them are saying, talking along the lines of getting out of debt, resolving gold issues and whatever, and starting to save some money. They seem to all be talking this way. Now, in this regard, the depressed price of gold, for example, around the world, well, at least in the United States, does that sort of indicate maybe a recessionary mentality?
Yes. It suggests two things. It suggests that there's more momentum in other financial assets for savers. And it also suggests that the fear of inflation is very low.
Right.
We talked about this on your last show too, Joe. People don't understand that the pernicious effect of inflation isn't felt in 3 months or 6 months. But all of us think our life expectancy is longer than 3 months or 6 months, and most of us are right.
Right.
The truth is that when I was a young man, I used to stay at a place called Motel 6 because I was cheap. And Motel 6 was so named because the room there cost $6.
Right.
When I drive on my way to my San Diego office, I go by Motel 6, and the sign says Motel 6, $69.95.
Right.
That is a wonderful lesson in inflation. There's only two explanations for that, Joe. One is that the utility of a room at Motel 6 has increased 11-fold in 30 years, which is unlikely. The sheets are the same and the room is the same size.
Right.
The other explanation is that the denominator, the U.S. dollar, has declined in terms of purchasing power with regards to overnight accommodation 11-fold in 30 years. You don't own gold because of what's going to happen between now and October. You own gold to safeguard your purchasing power over time. However frustrating it might be, gold is in many senses, Joe, like insurance. Nobody buys insurance looking for an immediate payoff. Imagine you went out and bought a life insurance policy. Do you really think you're betting against yourself? Do you want to die tomorrow because you took out $1 million policy? Auto insurance assumes that you got in a wreck. Home insurance assumes that your house burned down. You buy gold in one way, shape, or form, partially because it's social catastrophe insurance.
Right.
Either fast motion or slow motion. You don't pay too much attention to gold on a month-by-month basis unless you're a trader or a speculator, which is okay. But the reason that most people buy gold is not for that purpose.
Right. Do you anticipate any particular black swan event? I mean, if you had to just speculate what a black swan event would be, as so many financial analysts and investors are talking about worldwide, that could precipitate some sort of chain event that would cause economic uncertainty. Do you have anything in your own mind as to what that might be?
Joe, there's a flock of them out there. I try not to look at that part of the sky.
Give me a top one.
Aggregate consumer debt. But I think the thing that'll be the black swan in this country, and it shouldn't be a black swan, are defined benefit pension plans. Mm. I think that collectively we have made promises to each other that exceed our ability to repay.
Right.
The off-balance sheet obligations of companies that will default and load the obligation on the Pension Benefit Guarantee Corporation, and the benefits that have been accorded federal, state, and local workers are clearly unserviceable. The Social Security obligations are clearly unserviceable. In 3 years, I'm going to be eligible for Social Security. Well, I guess I'm eligible now. But in 3 years, I'm going to be eligible for full Social Security. And I'm going to take it, by the way. I'm going to sign over checks every month to anti-government organizations like Students for Liberty. I look forward to receiving my Social Security checks.
That's what I do, by the way. We do things like that, yeah.
But if I had to pick out one black swan, it would be the fact that people became arithmetically aware of the nature of the unfunded liabilities, including the Social Security system. But there are many others that could get in the way.
Yeah. Well, Rick, we are just about out of time. I'd like to give you the last minute or so to tell our viewers and listeners about your organization and how they may reach you if you wish.
Great. Well, we talked a lot on this program about the virtues of being cheap, and I'd like to share a bargain with your listeners. You can get the best ideas and opinion from the Sprott organization, the 170 investment professionals worldwide who work for Sprott, and selected people who we interview 3 times a week by subscribing to Sprott's Thoughts. Go to www.sprottglobal.com or www.sprottsthoughts.com. Click on subscribe. It'll arrive into your inbox 3 times a week. I guarantee you'll get your money's worth because it's absolutely free.
Right.
We also invite your listeners who have natural resource stock portfolios to allow us to do a no-obligation review of your portfolio, where we'll comment on the companies that you own if you dare. You can do that by calling 800-477-7853 and asking for the Rick Rule stock portfolio evaluation, or contacting me online. My personal email address is rrule, that's RRULE, @sprottglobal.com for a no obligation, no fee portfolio, natural resource portfolio review.
Okay, Rick, if I send you mine, you won't laugh at me, would you? I mean, I'm afraid it may be hazardous to your health. You may laugh so hard, you know.
We've all made mistakes, Joe.
Rick, thank you so much for being on our program. I do hope you accept our invitation to return at a later date. We'll try not to bug you too much, okay? And thank you so much for being on our program. It's a great show.
Thank you, sir.
Right. Thank you. Folks, this is the end of today's broadcast. We'd like to thank our sponsors for their financial support, and we'd like to thank you for listening in. You can further the cause of liberty by recommending this program to your friends, but let us hear from you. Our email address is comments@libertytalkradio.com. Remember, my wife would say, you're either allowing your liberties to be taken away or you're striving to protect them. Unfortunately, there is no middle ground. Until next time, this is Joe Cristiano. You've been listening to Liberty Talk Radio. Stay well, stay tuned.